Good morning. I think it's about 5 minutes. We have waited for everybody. I think people have joined and still joining. You guys can hear me, right? Therefore, I'll start again, just to recoup the last sentence that I said. My name is Chandra. I'm from Dunlap. Thank you for your time, first of all, coming in on a Saturday morning and attending our webinar. The topic is, everybody knows, everybody's going through this in the market for the last 10, 15 days, 1 month, 1.5 months, whatever, beginning of the year and stuff like that. Therefore, what do we do for liquidity? People need money. I mean, it's not like everybody needs money, and at various points of time for various requests and stuff like that. Therefore, we thought this is a very appropriate topic for the MFDs, RIAs, intermediaries, and stuff like that. How will we face some of the suggestions we give you, whether you can use it in your practice, in your business, for your customers and stuff like that, is what it is. You can stop me at any point of time and ask questions. It's easier that way. And in the end, I will open up the session. You can just, I'm not unmuted everybody. You can unmute and then start asking questions. Therefore, let's start the presentation. Again, thank you for attending. The first one is, so, I mean, like I said, market, it's inevitable, right? It goes up, it comes down. All of us knows, all of us have been in the business for some time. Therefore, it goes up, comes down. It's volatility is inevitable, basically. And how do we manage our customers' liquidity? I mean, that's a whole point, right? The whole point of the topic is, it'll go up, it'll go down, it'll go way up, it'll go way down. You have SIPs running, you'll have other things running and stuff like that. How can we do some liquidity? I mean, everybody has a need, like I said, and how we can have some liquidity options for the customers. I'll suggest some. I would be very glad to hear from you in an interactive way. What are your thoughts about this? And if you have any other ideas, which you can share it with all others and stuff like that. So, I mean, like I said, from the beginning of the year, it has been pretty bad. Probably the worst year. They say 2016, but it's still going down. This was like 3 days back. I think yesterday it went down to the graph. Therefore, it's going to be pretty bad for the start of the year. The first quarter seems to be not great unless something happens in end of February, beginning of March and stuff like that. Therefore, it has been, all of us know this. Seeing in a graph makes us much more realization, or much more realize the situation much more to that effect. Therefore, for the last 10 years, probably this is the worst year to be into the market. If you go to we take a step back and look at a trader who is doing stock trading or stock buying and selling and stuff like that, not specifically mutual fund investors. Some traders might be also, but their whole point is, when I talk to them, they say, I have stop loss. When it's stop loss, I'll sell it off and all that stuff. Therefore, it can prevent the downside. But that is just not for liquidity purposes. That is to make sure that their conviction is not done. I mean, you bet on some couple of things and it doesn't happen. Therefore, you want to get out of it and stuff like that. A lot of people confuse that to liquidity, but that is not what we are going to talk about. But like everybody knows, traders have a way to protect the downside. Protecting downside is different from having liquidity, money in your hands for other things and stuff like that. Therefore, just want to make sure what we are talking about and what we are not talking about. We're not talking about protecting your assets. We're talking about liquidity during these times. And also, I mean, any retail investor, doesn't matter whether you're a trader or a SIP investor or a retail investor who's building a wealth for a long term, for whatever goals you're building and stuff like that. It's if you ask them to buy more in a situation like this, which is what they should do actually, it's very emotionally difficult when you see your portfolio falling, the prices falling, there is limited cash. You always have limit on the cash. Even if you're the richest guy, there's a limit on the cash that you can spend and stuff like that. And the easiest way that the retail takes out of it is, I'll stay there. I mean, that's the best thing to do nothing and stay there and stuff like that. Some people do that. Some people buy more because they think, I mean, this is an opportunity and stuff like that. It depends upon each one's capability, the cash amount available, what they can leverage or what they can do and stuff like that. This is just various ways people deal with this liquidity issue, basically. Like I said, those were traders, those were stock investors, if you want to call it, and all that stuff. Mutual fund investors doesn't have, I mean, they can have a stop loss, but it's not a common practice and stuff like that. And then buying more and stuff like that is being taught slowly. It's coming to the picture. This same dilemma is faced in a very different way. I want to redeem my MF holdings when they should not, when you should buy more actually, but you cannot. Like I said, when the fear or emotion takes over, it is difficult to make you buy more or stay invested or keep quiet, do nothing. All that is great advice from an advisor, intermediary, and stuff like that. But it's very difficult to put in practice in the retail investors' minds. They need liquidity for various things. I mean, it may be a credit card payment, it may be education fees, it can be other things that comes along during the course. The crunch can last. The market can. There's a adage, right? Market can stay volatile as long as it wants to, and you cannot be. I mean, you can go bankrupt when the market is volatile and stuff like that. There are various sayings about markets volatility. Therefore, if there is a need, and there are needs, day-to-day needs, or month-to-month needs, or a seasonal needs like education fees and stuff like that. They need urgent money for money urgently, and they want to sell their things and stuff like that in a bad market. That's what liquidity, what we're talking about, and what one can do when they need money. I mean, everybody needs money at a certain point of time in a particular year, particular season, and stuff like that. What will you do for mutual fund investors, basically? I mean, this is another write-up. We did it 2 days back. I think it came in ET and stuff like that. I mean, it's a first real test, actually. Before we were talking about in last 10 years, I think 2014 or 2013, I think probably was the worst year for all assets put together. And it now about 10, 12 years later, when the SIP investors were not that many. I mean, if you look at the graphs, you'll know from December 2023 how it has gone and stuff like that. Even if you take back in 2014 and 2015, it has been like, it has been up and up. If it goes down, it will come up and all that stuff. Now it's a real sell-off is happening across the large cap, mid cap, small cap, doesn't matter. Like we saw on the other slide, across asset classes, across equities, across stocks, across all other assets except for bonds. There's a huge sell-off that's happening, basically. And only the conservative assets like gold and bonds have been protected because of their nature of the product. Rather than everybody is facing the sell-off issue. This is just to bring you to production as like the other one, that the whole market is talking about it, and we need to take cognizant of it. How do we respond? How does a distributor advise? When I say distributor, I include everybody, all intermediaries, RIAs, everybody included. I'm just calling them as advisors, distributors, intermediaries in various jargons. But basically, how do advisors traditionally respond to this? I mean, usually it is a very, very good thing to say, and very nice thing to say, and very correct thing to say. Forget nice and good and all is great, but it's a correct thing to do to stay invested in these times. If you can buy more, like I said before, it's better. But if you can stay invested, it'll be the best thing to do. Market will have its own volatility. It'll come up, it'll go down. It'll take 2 years to come up, or it'll take 2 months to come up. Nobody can predict it. But staying invested is the best thing to do. That's what we all, when we meet a customer for the first time or the third time or the nth time, we always say it's for the long term, 5 years, 10 years, 20 years, whatever the long term definition of the customer is, basically. Therefore, we are advising these customers to basically stay invested over a period of time. Therefore, that's what we are doing. But is that enough? I mean, is that enough? Can you convince a client to stay invested when he needs money? Like I said for the previous thing, like he wants a credit card payment, which is crushing him, or education fees, which his kids are going to school, or some kids or brother, sister, whoever it is going to do. Can you can you say them to stay invested, not worry about it, don't redeem it, and all that stuff? Therefore, you have to give them alternatives, or they will take their alternatives. It's their money, their what do you call, their own decision that they can take nowadays. It's very easy to redeem. It's a click of a button or a phone call to a distributor. It will happen and stuff like that. Therefore, there are two. If you are a mutual fund investor and your customer is a mutual fund investor and you're an advisor, you can give them, oh, I need money. You can give them two types of liquidity. When I say liquidity, cash in hand, that's what I mean liquidity. It's either outside the mutual funds, you can go and give them alternatives, or within mutual funds, how you can do liquidity alternatives for the mutual funds. Therefore, we have seen that it's inevitable. Market is going to be volatile. How long, how much, how far, and all that stuff, and what are the asset classes, and all that stuff is very subjective. People can predict, people can write articles about it and stuff like that. But the reality, it's volatile, and people need money. When I say money, it's liquidity is what people need. It can be either outside their turn on AI companion features. If you'll turn it on, okay, I'm fine with turning on. Somebody is asking me to turn on. I'm fine. I can turn it on, sir. Here are some things you can try. Catch me up, was my name mentioned. What are the action items? Okay, I'm not sure how to do this, but you can have the questions. You can ask the questions and we'll answer definitely. You can turn on your mic and ask it. It's easier for me rather than interrupt on the screen. But you can definitely, sir, please open up your mic and please ask the questions, whatever you want. Therefore, outside the mutual funds and within the mutual funds, like I said, outside the mutual funds, what you can do? It's selling. It's very easy thing to say, sell your house, sell your FD, close your FD, sell your stocks, high value items, basically jewelry and other things, basically. They easily sell other assets so that your asset will grow. But that's not a great advice in the sense they say, why I will sell mutual funds instead of selling my stocks, or I'll not close my FDs because there is a closing fee or a earlier cutoff fee and all that stuff. Therefore, selling other assets, one alternative. Other one is, say, borrow money. Like you have credit cards, you have personal loans, you can borrow from friends and family and all that stuff. Like I said, it's difficult. I mean, if you have other assets, probably you might want to keep them some or keep other or sell others and stuff like that. That's an individual preference and what they have and stuff like that. Borrowing money, obviously, again, a personal preference. And nobody wants to borrow money in their life. It's just situations that make you borrow money and stuff like that. So borrowing money is another option that we can outside the mutual funds. These are only two options. If we can know other options, we can discuss about it. Basically, either you get money from somewhere or your own assets you sell and get it back and stuff like that. Therefore, that's how usually people satisfy the liquidity needs outside of mutual funds. So, if you look at a person, I just put up a slide. You guys know this, and we don't have to get into the details of it. These are very expensive loans. Personal loan is probably 20 to 26%, somewhere around that. It can go till that. Credit card is definitely 42%. I know for a fact they charge you 3.5% or something, which is like 36 plus half, 42% per month on your outstanding amount and all that stuff. Therefore, it is basically a very expensive loan, and there is other things, a prepayment and all that stuff. Therefore, it's a lot of other things are required for it. You have to have a job or a ITR return, and there's other things that are returned to it. And there is limits on stocks. You don't get a credit card probably for 5-10 lakhs. You can get a credit card. I'm not sure you have a 20 lakh credit card or a 15 lakh credit card and all. Probably there is, and only people with that category on that category might get it and stuff like that. Therefore, even personal loans, I said up to 40 lakh, but I don't think people give 40 lakhs a maximum that the banks, not that the NBFCs say to us, but that's not true. It is about less than 3 lakhs, 5 lakhs sort of personal loan and stuff like that. Therefore, there are other alternatives which are expensive, difficult to get in the sense the qualification criteria are pretty stringent and stuff like that. Therefore, these are alternatives that you can suggest or they can come up with, but it has its own shortfalls and stuff like that. Therefore, outside the liquidity, outside the mutual fund is little difficult and expensive, not cumbersome. I would say a stretched out process with lot of qualification needs that needs to get these loans. Credit cards probably you can get it easier. Personal loan is a little bit more difficult because you can if you have one personal loan, you can't get another one unless it's closed and all that. So there are various conditions depending upon the lender that you go to, whether it's a bank or an NBFC and stuff like that. So that we start about liquidity outside the mutual funds. I mean, you can have other means other than selling and other than personal loan, credit cards, borrowing from a friend. I mean, how much can a friend give you for how long and all that stuff. Therefore, there's not many other options available to a retail investor we are talking. I'm not talking about a businessman or a rich guy and stuff like that who has various other means to get a normal retail investor. As some in mutual fund retail investors, somebody who's earning whose annual income, I wouldn't say earning, annual income is between 10-15 lakhs to 80 lakhs sort of thing. I mean, on either side, it's difficult to buy a mutual fund or you have your personalized thing and all that stuff. Therefore, this is what we're talking about, the retail investors not having much other options. So what about liquidity within mutual funds? If it is within mutual funds, we don't need liquid funds. I mean, I'll say, oh, I have liquid funds. Yes, in an emergency, you advise, most of the advisors, or if not all of the advisors, advise their clients to have a liquid mutual fund so that they can spend on it or take money on it. And we're not suggesting that. That's a liquidity that you already have. You don't have to have a system or a thing to do it. You can definitely have that and then take out from the liquid. That is what these liquid funds are for the reasons of emergency or any needs that you don't have to sell your equity funds and all. We're not talking about that. And one other suggestion that not a lot of people, some of the people are making it and stuff like this, move your equity because equity is going down, bond is great. Equity to debt, it has its own tax issues, moving and it's selling and buying basically. It'll have tax issues and exit load issues and stuff like that. We're not talking about that. Like I said, selling is the easiest way investors access liquidity. That's from the beginning we have been saying that selling is the easier way. But again, selling is not what we want to do. When we do liquidity within mutual funds means you have mutual funds and you want liquidity sort of thing. Therefore, that's very important. Outside, it's very expensive, cumbersome, and very high qualifying criteria. Within mutual funds, we're not talking about liquid funds. We're not talking about debt scheme and moving equity investment debt schemes and then taking it out and all that stuff. It has the same thing as filling of equity funds and buying debt funds and how long that will be, that will give returns and stuff like that. A lot of equations, I don't want to get into it about equity versus debt and stuff like that, but you can. I mean, advisors are very capable of advising what the customer's needs are and stuff like that. We are not talking about it. And selling obviously is the easiest way for the investor to access liquidity when you are within mutual funds. Like I said, the exit loads, the fees, I mean, obviously the most important thing that people forget, people talk about taxes, exit loads and all. Tax is only 12.5% one time or above 1.25 lakhs. I wouldn't go tax to that extent basic. And exit loads is only for the last 12 months for most of the mutual funds, other than a closed mutual fund. Everybody is like last 12 months is if you've invested, it's exit load, which is reduce the returns and stuff like that. The most important feature is the second one, loss of future gains. Like I said, nobody can predict market. It can be volatile for 2 months, 2 years. I don't know. I mean, it has been for 20 years in 1939 or some statistics is there, but after that, it does not happen for a longer period of time. And the longest is about 3.5 years or something like 87 and stuff like that. Anyway, coming back, the loss of future gains is the most important thing when you consider liquidity within mutual funds. Basically, I mean, last year, 2024, I think of the best years, I think 28% is a Nifty return, 28 or 28.5, something like some number between 28 and 29 is the Nifty return we are talking. And there are individual scheme returns, individual mid cap, small cap returns, which are much bigger, and small caps are much bigger, obviously, and stuff. That was 1 year, great year. 22 and 23 was also a great year. 21 or so, but last 2.5 years has been great and stuff like that. But we don't know whether those things will come back or stuff like that. But there is future gains. When we get a customer, we always promise them that why are you investing in mutual funds? You get better than inflation rate over a longer period of time. Stay invested for 5 years, 10 years, 15 years, 20 years. I mean, whatever the long term do. It's usually about 5 years and stuff like that. That's what we're that gains. That's the biggest problem of selling the mutual funds have. Obviously, we are all affected as advisors. We are all affected. I mean, our AUM reduces, our revenue gets affected, and stuff like that, which is a direct corollary of selling. Basically, when you sell, I mean, you don't get paid trail, and your AUM reduces. You're probably, I'm just guessing here, probably the AMCs are also not happy because AUM is reduced and stuff like that. Therefore, nobody can do anything. If the customer goes and sells it, nobody can do. But you can educate it saying, hey, there are exit load taxes in the near term, short term, you have to pay that. But in the longer term, it's much bigger loss than 12.5% on your gain and your exit load for the last 12 months. That's very, very like, it's probably 10-20% of the loss and stuff. But 80 or 90% of the loss comes from future gains, which is very, very important for them. So moving forward, we have done enough thing. Okay, is there a better alternative? That's what we're talking about, right? Liquidity within mutual funds. How can I ensure to protect the customer asset, protect my AUM, protect the future growth and stuff like that? How can I do it? And that's where that's where we come in, where it's called loan against mutual. Most of you know about it. I'm not going to say. I'm going to quickly go through loan against mutual funds, what it is, because most of you would have heard, or you can ask me. What is very simple, like loan against shares, which you have done it for years and years. Loan against mutual funds has been in existence for a long time, but now it's digitally done. In 15 minutes, you can get the money and stuff. It's made very convenient, digital, easier, and much more accessible to everybody. That's what internet or digital platforms gives you. Basically, the whole internet is basically about convenience and accessing resources. In this case, money and stuff like that, easier, faster, and conveniently. That's pretty much the slogan of an internet platform or digital platform, you call it. Loan against mutual funds is a better alternative. What it does is, if you, I mean, this is what we said before, the future returns, you're going to get, I'm not going to name numbers because that will become little complex. How do you know it is and all that stuff? Over a period of, okay, I'll tell you this. I mean, probably all of you know this. Any 5-year rolling return of an equity mutual fund in India has 12 to 15% CAGR. Okay. Any day you take 5 years later from 1992, I think the 1987 was the SBI mutual fund. 1992 was all other. 1994 was Morgan Stanley and all that stuff. If you take any mutual fund, equity mutual fund we are talking, which is not closed and open-ended equity mutual fund, you take a 5-year return, 5-year CAGR, it will be between 12 to 15%. Therefore, your MF investments will give better CAGR than your interest that you're paying. So that's a direct gain for your investors. Obviously, it's not only that, like last year and before, you're 27%, whatever, good years, great years, if you want to call it. Those years you gain a lot. You have to be in the market, right? It's not timing the market, it's time in the market, like everybody says. So that is the most important aspect of mutual funds. Like I said, future gains is protected and stuff. And then obviously we retain. The why doing it with a digital platform like us is very simple. No documentation. It's like any other internet. You don't need documentation. It's instantly approved when you're online. In 15 minutes, you can get the loan, the money into your bank account. It's not the approval that matters. Approval is great, but it's not about the approval. It's about the money that's transferred from the lender, bank or NBFC account to the customer account happens in 15 minutes. And obviously, when you get a loan, you have to have a repayment. You have to repay the loan, obviously. You can close the loan whenever you want. When you get money, you can have the unique aspect of our platform where you can pay EMI, which will reduce your interest rate. If you have a 10% interest rate, your actual EMI will be actual yield, or the actual money that goes out for the interest will be 5.47. You can do a small Excel calculation and you will figure that out. It'll be about 53% of the 54% of the actual interest rate that you're paying if you do EMI because of reducing interest rate. You can also have you have an overdraft facility where you don't take all the money. See, most of the people don't need all the money at the same time. They'll need something now, 3 months later something, 6 months later something, or whatever, 1 year later something or something. Therefore, we'll only charge interest rate. But there's a huge benefit of taking this loan against mutual funds, not only protecting your assets, having it easier access and stuff like that. the problem, when you're repaying, I mean, when you want money on your hands whenever you need it, just in time money sort of thing. All this flexibility and convenience is available on the platform for loan against mutual funds. We're one of the platforms that offers you this. Obviously, because internet and digital, now it's available anytime, anywhere, and nice things like your browser or an app, you have an app, browser or a mobile phone. You can get a loan whenever you want, wherever you want, sort of thing. So, like I said, this is the balance. See, you have to strike a balance, right? Nothing is great in life, right? It's always about balancing, about which is better, which is worse, and what is the balancing between bad and good sort of thing. This liquidity and investment preservation, I don't know of anything, but if you have any other ideas, you can definitely share and talk about it, and I'll learn about it. I'll be very, very happy to do that. Basically, when you need money, when you need liquidity, we call needing cash, basically. There is no better balance basically than loan against mutual funds for your needs as well as your preservation, which acts. Yes, you have to pay interest. There's no doubt about it. It's not free money. Nobody gives you free money. I would love to have free money. There's no free money, but what is the best balance? What is the optimized balance? I wouldn't say perfect balance. I would say optimized balance between liquidity and investment is loan against mutual funds. You can think about it and take a decision for your customers and stuff like that. But this is preserving the future gains. I'm saying again and again because a lot of people forget why they are taking loan. They're taking loan for a short-term, term need and payback and all. It's not about. It's also about that solving your problem, but it's about preserving your future. Basically, that's pretty much why this thing. I mean, like I said. There is huge market data where I showed you a couple of slides before how market is falling and all that stuff. Even without market falling, we're talking about 2024, where market was like highest probably in the last whatever 6 years and stuff like that before COVID and stuff like that. The gross versus net is 49%. Basically, what you're saying is if you put 100 rupees as a gross inflow into the market on that month, 51 rupees have been taken out of the system for whatever reason. It can be redemption, it'll be investment to other things and all that stuff. Therefore, this has a huge effect on your business. When I say your business, advisors, intermediaries, distributors, the basically I call distributors, business basically. If you look at it in a very, very crude manner, a business grows around 15 to 20% a year, usually. And on a normal year, you have great years and you have bad years and stuff like that. The average investment loss is about 10%. That's what usually they say. Let's take it as 3% just for mathematics purposes, because 15 can be divided by 3 very easily, basically. That's pretty much it. Therefore, if you take an average redemption loss, which is definitely you will have 3% loss. I don't know any other has, but there will be some exceptions that might have lesser redemptions and stuff. 3% of your time will go as redemption on any year, any given time and stuff like that. If you do that every 5 years, you will lose a year of income. That's what will happen. Every 5 years, you lose a year of income. Just think about it. Therefore, redemption has its own effect on the investor for future gains, and also has an effect on your business significantly, because every 5 years you're working for free for a year, basically, which is really bad. Nobody wants to work for free. I mean, everybody is working for a particular cost, particular business, particular revenue and all that stuff. Therefore, nobody wants to work without a cost, revenue and an impact on their own self and stuff like that. Therefore, this is basically not only about the customer, it is also about the thing. And when you see numbers, it hits you. See, if the redemption is bad, yeah, I can keep on shouting until cows comes home. But this makes you realize that, hey, it is affecting my business significantly, and this is what is happening to me. It's not like it's going to happen or anything. It's happening to you on the best. That's why I took the data not from today. Today the data is much worse. I will take data from 2024 because I want to know the best year you are losing money. Therefore, on a worst year we are done, basically. Okay, just for information, this just think about a couple of minutes about this particular, and definitely you can look at your P&L, your business cash flow and stuff like that. And you will come to a conclusion that what I'm saying is very less. You might lose like 1.5 years of every 5 years, or 1 year out of every 4 years or something like that. Therefore, it must be worse, not better, because this is reality, basically, and this is what is happening. The other one is, what are we? Like I said, Dunlap is our platform. Acneo Financial Services Private Limited is our company. I just want to introduce our platform, which is basically we are doing loan against mutual funds, loan against shares, loan against insurance, and loan against digital gold. Our primary purpose of today's meeting is about loan against mutual funds. Therefore, I just explain to you about it and put a couple of slides on other products that we do and stuff like that. This is where my first slide of my product starts basically. We are 100% digital LAMF, loan against mutual fund platform. We have been there for about 3.5 years basically. We're the only platform that has multiple lenders. I have like 5 NBFCs and a bank. And a couple of other things will come by the end of this year or something, like a couple of other lenders will come. What multiple lenders gives it is the flexibility of not only money, but also of interest rates, the matching between the customer. Customer might not qualify in a particular lender and stuff. If you have multiple lenders, it's easier for customers to have multiple, I mean, not offers, I would say at least one offer so that he can get the money when he wants. It's a secured loan, so it's easier to repay and stuff like that. Like I said, it's all online. Therefore, it's very easy end to end. You don't have to submit any document and stuff like that. I mean, we offer we offer loans against any mutual fund, equity, debt, gold, any of them except for closed funds. We offer all the mutual funds that we do. And there's no maximum, there's a minimum limit on the loan of 95,000, but there's no maximum loan limit. If you have as much money your customer has assets, that 50% on equity and 70% on debt and 75% on gold will be given. I mean, that's just the LTV, we call loan to value ratio. If you have 10 lakhs, I'll give you 5 lakh of loan. If it's only equity, I'll give you 7 lakhs if it's only debt, and 7.5 lakhs if it's only gold, sort of thing. Those are the things. RBI regulations, it's RBI regulation for equity and gold. Therefore, we follow that and stuff like that. Like I said, with this, the product itself, forget about irrespective of the platform and all that. The product itself is the most important thing, which is protecting your assets, protecting the customer's assets, customer's future returns, protecting your AUM, your trail fee and stuff like that. Making it digital is a cream on the cake sort of thing, where you can do it easily and complete the process. Your customer can do easily, and you can also assist your customers, which I'll tell you in a few slides later, that you can also help the customers to finish it as fast as possible and get the money to him so that he's happy, everybody is happy, and his, most importantly, his AUM, his asset grows. Whatever, as the time goes on, his assets is not sold off, it grows and stuff like that. So for advisors, basically, we can, when you register with us, if you've already registered with us, you would have known about it. If you're not registered with us, there's a link which is sent along with the registration, or I'll show it at the end of the slide. You will have a personalized link for yourself. Therefore, you can send it to your customers using WhatsApp or SMS or email, whatever you want. You can send it across, and then you can tell them to click the link, and they can go through the process themselves. That's one way of doing it. Another way is an assisted model, which I'll talk. But basically, the client applies, and the analyzer portfolio will check the eligibility, will let you know how much loan is available for the client, how much he can, maximum loan he can borrow. For example, 20 lakhs of equity funds, he can borrow 10 lakhs basically, and maximum amount is borrow and stuff like that. And there is a video KYC that happens for like 10-15 seconds basically. And then the pledge happens, and the money is getting transferred instantly after the pledge and the agreement is signed. Everything is digital, like I said. The money will be credited to the customer's bank account from the lender's bank account. This is basically what the process in a very brief manner. We can show you a detailed demo if you're interested. We have a video of the demo also. We will go through it. Once you sign up with us, you will get the video. If you've already signed up and don't have the video, let us know. We immediately send a video on how the whole thing happens so that you can tell your customers and onboard your customers. So I mean, there is also challenge, right? I mean, it's not like, I mean, you tell the client and then, hey, let's do it sort of thing. There's not a movie that the person goes to and stuff like that. Therefore, there is a fear of risk of the client, and then there's a misunderstanding of the product, and there's an emotional attachment to investments. I'm not going to go very deep into it. Basically, what it is, I mean, loan is usually a bad word, usually. And because taking a loan, somebody will come to my house and knock on the door and get the money from me. There's a lot of instances of people getting scared and all that stuff, which is exactly fear, basically. But that is basically personal loans or a vehicle loan or whatever types of loans, the various types of loans in the market. And one of them is that. They don't have to worry that their investments will be taken away or sold or anything like that. You cannot do it. There are regulations, there are SEBI regulations, there are RBI regulations, there are regulations around it that you cannot just take somebody's asset and sell it. There are certain circumstances, yes, you can sell it. There are certain circumstances and certain ideas that is having it basically. And somebody has asked, I'm one of your associates, it would be nice if you, yes, I will do that. I will do that to you. By the end of this, I'll give it to you. I'll have another 2-3 slides, and then I'll share you the process. I'll show you the process for sure. And if still, sir, if you have question, please let us know, and I'll individually go through somebody in the company will individually go through a video demo for you from beginning to end, how it happens and stuff like that. The fear of risk and misunderstanding of the product, basically. Hey, what this is, oh, what is this? It is my mutual funds will go away. It'll be assigned to somebody else. It will be in their name and all that stuff. You guys know all this stuff. I don't want to go very deep, but these are the 3 things that I want you to be aware of, and then make sure that we are not taking away a mutual fund. We are not transferring your mutual funds, anything like. We are just pledging or lien marking or whatever the word that's convenient to you, or assigning, whatever you want to call. The various people call it various. Usually in mutual fund world, they call it lien marking. In the share stocks world, they call it pledging and stuff like that. Doesn't matter. It's basically pledge. You cannot sell it at that point of time when you're pledged or lien marked. Other than that, it's you own the product. The returns of the product are yours, and everything is yours and stuff like that. Therefore, just to tell you what is the challenge in selling. This is where I come to. We're the first ones to create this again. We have a distributor assisted model. Okay, what it does is there are various, like the gentleman asked, I'll go through the process, various process that happens during the loan onboarding process, we call it. When the customer is taking a loan, he has to enter his PAN, he has to enter his OT, he has to enter his email address, and then he has to enter FATCA information about himself. All the information you have as a distributor, as an advisor, you have most of this information. Instead of troubling the client, what we did was, like in mutual fund investments, all of you would have done it. You will select the client's investments and stuff like that and send him a payment link, and the client pays and he gets an email, what are all the investments he has and all that stuff. He looks at it and say, okay, and he pays for the thing. Similarly, I mean, it's not exactly the same, but very similar to it. We have built a process or a system or platform, if you want to call it, a distributor assisted model, where the distributor can fill most of the client data that you know. And these data, you know his assets, you know how much loan he wants, you know his mother's name, father's name, all that nice things, you know which bank account he is, because he's given you the folio of the bank. You can verify the bank and all that stuff. For most, and you know his PAN number. If we give all that information upfront to you, we will be complete about 60 to 65% of the process will be completed, and you can send a link. Today, before all other platforms, including us till now, has been sending the link to the clients, and the clients have to, from the beginning, start doing all the steps. Here, we just make the life easier for the clients to have, just start from the 65th percent or 60th percent of the process, basically, and go to the next of the party person, because we can't do the next of the 40, because it's like a payment. A lot of OTPs come from the for lien marking and stuff. A lot of OTPs come through the system and stuff like that. Therefore, clients have to enter the few OTPs and go through about 4 or 5 steps. Basically, you would have gone through 6 steps and stuff like that. What this does is it makes the customer comfortable, because you have started the process. This is trust. You have already the trust, because you're managing his money, and then you have other things. Thank you for joining the session. Okay. So yes, we will send the PowerPoint and this thing. Somebody has asked about it. Less client interaction, and then it's faster processing, because your effort is there, most of it, of data entry, choosing the plan, choosing the schemes to pledge, to assign or pledge or lien mark and stuff like that. All your effort plus customer acceptance. Customer has to accept. That's like a regulation where customers say okay to everything that you've selected, and it becomes faster disbursement. This is the one that we have released recently, and we can go through it as you join us. You'll see that, and we'll go through it and stuff like that. This is a distributor assisted model which we have. And then before I go to the process flow, this is the start of the process flow. What are we required to do this? Basically, you need, for the customer I'm talking about, customer needs to know is, I mean, obviously has to keep in mind, or he has to know his Aadhaar number, PAN number, bank IFSC code, and bank account number, because we have to verify the bank where the money has to go and where the repayment has to come from. PAN number and Aadhaar, obviously, for KYC purposes and stuff like that. The most two things that people miss it is, basically, people have multiple emails, and some people have multiple mobile numbers for sure and stuff like that. You have to give the email of the customer, the email that is associated with the mutual fund folio. I mean, their Aadhaar and bank account is also good to give mobile numbers, but email and mobile number associated with the folios is very important. We have seen that's where most of the clients or most of the advisors are giving other email addresses or other alternative email address or alternative mobile numbers of the customer. That will not work because the backends of the mutual funds like CAMS and K FinTech only goes through the email and mobile numbers which are on the folios. If they are different, then the lead marking and other stuff cannot go through. Therefore, please give your customers email and mobile number that's associated, which you have in your reverse feed and other fees that you get, or in your systems that you have stored when you invested in stuff. You have the customers folios and their associated email and associated mobile number and stuff like that. So please do that. And somebody, before I go through the other things, somebody asked about the process flow. Give me 1 second. I'm trying to get that slide. Here. So, I mean, the person who, I mean, for everybody and the person, thank you for asking the question. Basically, we sign up, you sign up and you can download our app or use our web, basically. You can sign up with an email and mobile number. And then we will bring in the mutual fund that you're associated with your PAN number, email. That's why we want your email and mobile number associated with the folios. With that, we can bring in the mutual funds. We can bring in the mutual funds associated with you or what you have invested in, stuff like that. And from there, we will do an optimal allocation saying, I want, hey, do you want, I have 20 lakhs, I want 3 lakhs loan or something. The 6 lakhs will optimally select which one has to be pledged depending upon long-term investments and stuff like that. But you can also modify it, or the advisor can select whatever he wants to for the client, or the customer can select himself. Then we do a bank verification, which is basically a penny drop. That's the bank number and the bank IFSC code and account number. We do a penny drop. We drop 1 rupee into the bank account and get his name and verify his name is same as a PAN name and stuff like that. Then there's a 10 to 15-second video KYC. You should have a camera turned on either on your laptop or obviously on your phone. You have a camera and stuff like that. You have to come on the thing with your PAN details, and you will have a video KYC in 10 to 15 seconds. Somebody will ask you what's your name and stuff like that. It is a regulation which you have to go through. And then the lien marking will happen. Lien marking will happen both with CAMS and K. If you have funds, if you have schemes in both of them, CAMS and K FinTech, both the RTAs will have schemes. And then you have the loan. Like once the lien is marked, we know exactly what the loan amount is, what the lien marking pledged funds are and stuff like that. Then there's an e-sign of the loan agreement. Basically, we read and e-sign the loan agreement. This is also digitally done. We e-stamp it using NESL and e-sign it using Aadhaar and stuff like that. We e-sign it with the lender's DSC and stuff like that. We can get into details as we go along. And then there's immediately overdraft, or you have to select whether if you have the, oh, I want a 5 lakh loan, I want 1 lakh now, and I take it later. You just say overdraft 1 lakh right now, or I want all the 5 lakhs right now and stuff. Whatever your option is, you'll receive your money immediately. I mean, it says the same day to just be regulatorily compliant. You'll receive it in the next half an hour or so. The money will be credited to your bank account and stuff. Hopefully that answered your question, sir. But this is a process, and after this, there's a process of we will keep on monitoring the loan process and so loan amount and all that stuff and send you email. All of these processes will have emails to the customer copied to you. Any email that goes to the customer will have a copy to you because we want to keep you in the loop. You're the advisor. You're the person who's responsible for his investments. We just want to be updated. When he pays back, when he pays each payment and stuff like that, it will be done. When he closes the loan also, you'll be informed and how much is outstanding, or if there's any amount still, whether the mutual funds or schemes are revoked means we take out the lien so that he has paid the amount and stuff. Every information that I send to the customer will be CC'd to you in all the emails. Before I finish my presentation, I want to give you 2 simple things before I open the floor for this thing. Basically, when we talk about, this is where we stop. When we talked about liquidity, we have other offerings also. What about new money? Okay, this is old money. We have mutual funds. Old money means money already invested. It's fine and all that stuff. What about new money? We have a couple of new products that we have launched basically, and we are offering it through our advisors, through our partners and stuff like that. We call them Dunlap partners. Therefore, we're offering it through you. The fixed deposits, we have it in the system. We have it from 3 different Bajaj, Shriram, and Mahindra, and we're already worked with Axis Bank and a couple of other banks, which once I sign the agreement I'll put. It's going to be easy for you. In a one click, you can ask the customer to come in and do the KYC, and we have all the information already of the customer. Therefore, we will be able to immediately offer fixed deposits to them if they are interested, because these are fixed deposits product, which is not a mutual fund product, which is basically not an equity product. At least, I mean, debt mutual funds probably is comparable, but other than that, it's a fixed deposit product. And like I said, I mean, the alternative to equities is gold. We have a gold platform in which you can buy and purchase digital gold. We are not about real gold. Therefore, in a liquidity crunch, if you have existing assets, then yes, if they want to invest more money and they have money, they're afraid of investing in markets and stuff like that, they can go through either fixed deposit or gold, or both, basically. They can SIP into digital gold. We can talk about it in detail later. I just want to bring it up because we are in that topic, and what we are doing is educating the distributors, partners, and stuff like that on what we are offering is and stuff, right? This is your dashboard. This is basically when you log in, or when you sign up with us, you will get all this stuff. You can share things with your clients, our WhatsApp messages, our email messages. You can share it with your new clients, existing clients, and all that stuff. You have some videos. You can check eligibility. How much? Oh, this client is coming to me today. What is his eligibility? You can immediately check how much he's coming to redeem, or he wants redemption, or he's calling you for redemption. Are you going and meeting him for some of his immediate needs? Then you can check eligibility. Oh, you can have 10-12 lakhs of loans today. You can take it up if you want to, and stuff like that. There were other things that are available in the partner corner. We can go through this demo also.
Excuse me, Mr. Chandra, can I ask you something?
Sure. Please, go ahead.
Yeah, I am a MFD from Guwahati.
Okay.
Okay, so I was trying to empanel myself as a partner.
Sure.
But initially, when I went to your site, actually, I had registered myself as an investor with the same phone number as well as the email ID.
Sure.
So,
send me an email, sir. Send me one email at contact@dunlap.com or chandra@dunlap.com, or anybody that you know of. Immediately, we will change you as an advisor.
Okay, done.
Send me an email saying I want to change, because I can't change it without, I can check Satya and check it, but I cannot do it. There is legal implication to it. Therefore, just send me an email, one-liner, hey, change me to an advisor, and we'll immediately do it, sir.
Okay, done. And
you can't have one thing, Satya, and others. You can't have the mobile number, email. It's a very, very deadly combination. Mobile number, email of the customer as well as the advisor being the same. That creates a lot of confusion in the system, the platform, in the back offices and stuff like that. That's why you will be an advisor and you can onboard clients. Just send a one line.
And what would be the interest rates for these?
Somewhere right between 10.5 to 12, depending upon the client, the requirement, and all that stuff. We have banks which are giving, a bank which is Australia, which is giving at 10.5. There is NBFC which is giving at 10.75, 11, 12, and stuff like that. In loan against shares, we give it at 12 and stuff like that. So in the range 10.5 to 12, sir.
And foreclosure charges?
There's no foreclosure charges, sir.
Okay.